right, good afternoon and welcome to the TiE Conference's panel on AI and the future of global trade, innovation, investment, and industry perspective. I'm going to invite my four panelists to come up here. I'm Matt Webster. I'm a managing director from the University of California Investment Team, and I will be your moderator today. So let me introduce you quickly to our panelists. To my left is Muddu Sudhakar, a serial entrepreneur and co-founder and CEO of Aisera. Next to him is Fabio de Paula. He is the co-founder and general partner at Indicator Capital. They focus on deep tech VC investments, bridging Brazil and Silicon Valley. Thank you. Next to him is Jyotika Gupta, partner at Z21 Ventures, an early-stage VC backing founders building AI and enterprise SaaS across the U.S.-India corridor. And last but not least, Shiva Esturi, who is the VP of Global Supply Chain Management for Micron. He's responsible for end-to-end supply chain management, focusing on customer service, time to market, and cost to serve goals. All right. Well, with that, so we've got the interesting one focused on global trade and really what's going on with Trump 2.0. So let's kick off and start by talking about AI use cases. So as we deal with tariffs, as we deal with supply chain disruption, what are some of the use cases that AI today could help corporates, both large and small, to solve some of the challenges we're facing? So Shiva, if you could kick us off, please.
Thanks, Matt. I work for supply chain at Micron, and Micron is approximately $25 billion in annual revenue. We pretty much start from sand, raw wafers, and build the memory chips that goes into AI servers like the automobiles and the mobile devices and everything. The supply chain is like constantly we get into this supply-demand imbalance and then the volatility of the demand. And now the latest addition is the more frequent geo and political disruptions. And in order for like the supply chain to continue to progress and then cater to the needs of the overall demand, we try to focus on like 4 A's, or we call it a quad A value chain. The first one is aligned. Over many years, all the alignment within the 4 walls of the company and organization have matured. Now, AI provides a pivotal point for the ecosystem value chain and the partnership. When I talk about the ecosystem, it's just like how can we extend how we collaborate within the 4 walls of the company to our customer, and then suppliers, and suppliers. And with that, it will eliminate the scenarios that we witnessed, the toilet paper phenomenon, or the chip shortage, or the chips excess scenarios, very frequent of these happenings, kind of a thing. So this end-to-end ecosystem partnership could be one use case, and then it's more practical now because of the data availability of multiple organizations being in the cloud, having a good secure and access controls. It will become an easy collaboration across the companies. That's one area that I can think of.
Yep. Maybe you could point us, as you are a practitioner, and then also to bring Muddu in as well. Are there business models? Are there companies in particular that you would point, entrepreneurs or venture capitalists in the audience to that are best in class in solving some of these problems? Yeah.
Currently, we don't see the startups or the investors we're looking into end-to-end ecosystem. Okay. So it's that's one of the opportunities. That's why I'm bringing up this. We piloted with one of our big hyperscalers. We produce the servers and we sell them the memory for the servers, and their end customer is a big cloud service provider. Yeah. And so it's we're looking into this, how do we partner across this ecosystem, across the value chain to enable it?
I can give a look, guys. By the way, good afternoon. So I think, he asked a very good question, Matt. So where people are making money. Right now, people are making money in hardware today. Unless you are an NVIDIA or a Broadcom or hyperscalers in AI, those are the guys who are making money. That's where Trump's tariffs really make sense. Software guys, there's not. In the software, the use cases are code assistants. In Silicon Valley entrepreneur right now, the key things is like people like Windsurf or Cursor or GitHub Copilot. Those are the companies who are really doing well code assistants. Second is, as I said, the use case like IT, customer service, the employee services. Those are the use cases that are really, all other use cases, there's not much money to be made today in AI. So just that's my perspective of where I see it. I'm an investor, entrepreneur, founder of companies. So from my side, just those are the important. Now, the back office use cases like the supply chain, etc., may happen in the future, but not today in 2025.
Great. All right, let's move on. So as tensions rise between China and the U.S. with potential for decoupling increasing, how is this going to change, innovation and centers of excellence? So, is it something where, China has invested a lot of money, maybe, for India and other countries, are they going to become more competitive? Can the U.S. stay at the peak of AI innovation?
Wow, a very loaded question. So I'll give you see, look, in general, I'm very pro-tariffs. I call it tariff baby tariffs. Like more tariffs are important for there's only two topics that are important right now in the Valley or in the US. It's tariffs and AI, right? So with this, I think, look, China is, 50% of AI researchers are in China, guys. So for US to win this race, it's not a race for 4 years or 10 years. It's a race for lifetime. So US public policy and the private companies, we have to go all in terms of AI, right? So in terms of from AI talent and researchers, we need to invest a lot more on AI. We need a long-term perspective. It's a long game in terms of where we are going. So where we are doing in terms of policies, we should do enough investment so that the tariff should help the US companies to do better. I'm not interested in companies like Mistral, which is born in France, to do it. So in general, so far in the past, most of the international countries did not help Silicon Valley companies. So in a way, what Trump has done as admission, I'm pretty favorable to that. How will that translate into AI is yet to be seen. We need to go all in this race to beat China. China is not behind us. China is very close to the US right now.
Great. Well, and let's bring in some of our VCs to tell us what's going on in your portfolio companies. So as you your companies seek to recruit talent, how has some of the Trump immigration policies and some of the outstanding or interesting stuff going on there, is the talent pool and pipeline really challenged for you, or how are you managing that?
Yeah, so we invest a lot of enterprise AI companies, and that talent is very concentrated here in the Valley. And as Muddu said, I think 1 in every 2 researcher is from China, and if you look at OpenAI, 70% of their technical staff is people that are immigrants. So we are seeing that challenge, and especially in the early stages. I was reviewing a company, and his head of AI was sitting in Hong Kong, and ultimately they decided not to get him on board because he couldn't move to the US. So we are seeing those kind of challenges. Companies are working around those, setting up hubs in Bangalore and Canada and Europe. But I think teams need to be located here because here is the risk capital, here is the talent density, and here is the innovation. So I think we will have to work around those for now. But in the long term, we will have to find sustainable ways that folks can co-locate and work together here in the Valley.
Yeah, Fabio, can you share your experience?
Yeah, sure. I think I can comment on the last 3 questions. I'm co-founder and general partner of Indicator Capital. We are the leading venture capital early stage investor in deep tech in Brazil, cross-border to US and Latin America overall. And in terms of use case, we have been investing a lot on everything that we call smart and connected. So I think, software only maybe is less valuable now. Models like hardware as a service that you combine, the collection of data from sensors, devices, cameras, and then apply on many across the industry on the enterprise applications. I think there is a lot of value there. On the talent question, on my portfolio, we invest cross-border US and Brazil a lot. We have different kind of companies. Certain companies are more local solutions and, under a regulated environment like finance. So they are less cross-border, but others are born global. They have intellectual property that can be applied anywhere in the world. Technology is like water. You can put it whatever barriers you want, but eventually, the water is gonna leak, it's gonna find your way. So yes, it gets more difficult as you put up barriers, and I know that from speaking, I have 30 years of industry experience working for Intel, IBM, locally in Latin America, and we have lots of barriers. So they can be tactical in the short term, but a long term, the best technology is going to win. No matter it comes from China, no matter it comes from US, no matter it comes from India or Brazil, the good intellectual property is going to win, or medium term, long term. Of course, you need the right environment for these things to flourish. Silicon Valley is the best place you can do that. So I think this cross-pollination nowadays is much stronger, even if you have trade barriers. Even if you cannot bring your engineer here, the engineer can, connect to the rest of the world from India, from Brazil, from anywhere in the world. So I think, these forces are, to be questionable now. After the pandemic, the pandemic was a good example. You had the China lockdown for a strong period. You can make a parallel. Even though there was a lockdown, that make longer for things to happen. Maybe some companies die in the process, but many others flourish just working remotely. So I think that's my point.
Let me add a comment on the investment side. Look, what I'm seeing out there on the investment side is totally different, guys. With AI, particularly with AI and agents, you can now build a company with one person, two person. There's a leader dashboard of a company reaching $1 billion ARR. You can watch it. So this changes the fundamental investment. So if I'm an entrepreneur in the audience, I will not go to large funds. I'll go to Matt and I'll go to Jyotika probably. The smallest funds will go really well. Don't go to large funds which are raising a lot of capital because you don't need that much capital. You can even bootstrap a company today. With the whole idea of AI and agents is if your company is more than 10 people, you're doing something wrong. Look at Cursor, it's 20 people company doing 200 million ARR. That's a new normal. As an entrepreneur, this is like the dream come true. Obviously, after you reach certain scale, you may need more investment for later stage capital, but to get to product market fit, to get to 10 million, 100 million ARR, you need 100x less people. That means you need to take less capital. So all these large VC funds who raise capital are not the people to go after, because they want you to take more money. It's in their conflict of interest. So approach small funds, go to family offices to raise money, right? That's where the whole investment game with AI and agents have changed.
Thank you. Well, and I think that's a good segue to our next topic on the financing market. And so, we at the University of California, we have a very large funds program where we work with GPs to go out and find these small businesses. And then also about 30% of what we do is co-investing into these businesses once they find that product market fit. More broadly, though, private equity and venture capital have faced a very challenging last 3 years as distributions have dried up. Fundraising for our GPs is getting very hard. But AI does seem to be one space where there's still a lot of demand, where entrepreneurs and great business models can command premium valuation. So it would be great if, again, let's go down the panel, if you could share your thoughts on what does it take to get funded today? What are you looking for as an investor, that really stands out in the market? And just help us understand, why when the rest of the market is falling, premium valuation still makes sense for AI.
I think, as you said, Matt, a lot of the AI companies are able to command good valuations because they're able to show the track record and traction with a very small and a very high impact team. So I've seen companies with 3 people at $500,000 in revenue, and those are the sustainable companies that have the right unit economics, have the right product market fit, and are ready to scale. So that gives VCs right now a lot of conviction. We are looking at investing in a lot of technical founders because they understand the game right now. And we also look at some tailwinds of the market. So, for example, right now, manufacturing and AI in manufacturing is something that's very exciting. I've literally reviewed, I think, 5 companies in the past week in that space. So that's something that's ready for disruption. So, as I would say, like this track record, which is very sustainable, teams that understand how AI is going to disrupt the market, and then strong market tailwinds.
Yeah, I think we are in a tipping point of technology, as we had others before, but this seems to be very big. I think I believe in the 1, 2, 3, 5 people team with a new idea, developing something new in AI. At the same time, I'm a little bit skeptical as well, because you don't know how long that is going to last till that feature that you are developing is included in one of the big models. I think I see a lot of opportunities in my portfolio nowadays, and the core of this, the current fund was IoT and connectivity, was not AI. Even with that, out of the 15 companies that we invested in the last 4 years, I think 14 of them, most of them are AI companies. We can say they are AI companies. And we were the most active investor in AI technology companies in Brazil in that stage, just because we were investing in IoT and connectivity. And I think that is a big important point, because these companies, they have been building their solutions, creating proprietary data that I think is the key differential nowadays, because what feeds the AI is the data. So companies that have access to a proprietary data, real time, 24/7, this could be a big differential. Many of these companies, they were doing AI, machine learning, the traditional AI before the generative AI, and now they are incorporated agents, more in the user communication and the contact. So I think there are many opportunities nowadays that you can play the AI game, and some are more, more disruptive than others, but I think there are many opportunities across the board for every single industry. So AI can be applied everywhere.
I'm sorry, I can't sit and not agree with him on this. Look, I don't believe in IoT or etc. Nothing against you, Fabio. Look, right now, if I'm an entrepreneur, I'll do a company in pure AI, company or cybersecurity. I mean, there's really, outside of this, there's enough game to be played there. But I think your question is different, Matt. Your question is, as an investor, is the valuation justified? Is there a premium? Look, public markets are down 50%. No, the premium is not justified. So as Jyotika, you are saying, I don't agree with that. So premiums are not justified for any of these companies which are getting AI. Some of them are getting such a 60x, 100x of their revenue multiple, ARR multiple. There's no way that's sustainable. Even Snowflake doesn't have that multiple anymore. So I think, look, Microsoft is down, NVIDIA is down. So given that all these things are down, private companies, whoever is investors, if you're not resetting your private company valuations, you're doing a disservice. So most private companies will go through a lot. A lot of companies are not getting funded. All the companies between B to D, I call them dead men walking. They are not the unicorn, dead unicorns there are. Most of those companies are going to die. They're going to die slow death if the investors don't pull their money. So you can actually put them out of misery by putting their portfolio companies out of business, because these companies should not exist. Like I call it BC. You know what is the BC stands for, guys? Before ChatGPT. You know what is the AD stands for? After DeepSeek. So any company which is born after DeepSeek is only one who will survive. So if you're a company before DeepSeek, you're a dead company. So good news is you start a company after DeepSeek. Yep. Okay? All the premiums are not justified.
And I'll just throw in my I'll throw in my
I can get a clap or something, guys.
Yeah, here we go.
All right.
Yeah. All right, I'll throw in my last perspective. I mean, it was fascinating in 21 as the markets were ripping. It seemed like everybody was getting funded at these premium valuations, and everything was priced to perfection. And 4 years later, I mean, we're seeing in growth and venture, people are still trying to grow into these multiples, and if they can't, the down round, flat is the new up. Right, so it's an incredibly challenging market out there. I think before we move on to another topic, would be interesting to hear how are you advising your companies? Right, is now a time to invest and maybe try and take share, or invest and go to market, or is now just the time to survive and wait for sunnier days?
I can go. So any company that I've invested in around 40 companies, I remember I'm a founder, investor, so I'm telling my companies to actually cut their number of employees. Like today, you need to reduce, if you have a 100, 200 employee company, you should be 50, 30 companies. 40%, I don't know if you saw, Satya just announced, 30% of the code at Microsoft is written by AI, code assistant, right? Same thing at Google, 40%. So if you are a software developer, the number of developers will only go down. Mark Benioff said he will not hire a single software developer in the US. So look at your companies, guys. You should eliminate people in software, customer service, IT. So first thing you should do is cut what you have. Save your money, right? Don't go to investors without doing that job. Don't raise more capital. Raising capital is not the answer. Even if you go get, you won't get a good valuation.
Again, I think there are many plays, different plays. I think we tend to, on every single new wave of disrupt technology that happened, and it happened before, and is happening now in a much bigger and faster way, as always. It's not that, the new companies are going to disrupt all the incumbents from a few months. So there is a lot of things to consider. What we have been advising our companies is, make sure you can play in the long term. The short term is going to be very transformational. Everything is changing. AI plays a huge role. Every single company should know, before hiring a new person, do you really need a new person, or you need an agent, or you need AI? So don't hire more people. Don't raise more money. I agree totally. See what you can do and how you're going to play the next, 2 years. I'm not going to say 5 years, because I don't think anyone in this room know what's going to happen in the next 5 years. So, can you survive in the next 2 years? So play, be a little bit conservative now. Make sure you can survive. You have enough cash to go through these, changes.
I think I agree that efficient growth is sort of the flavor of the season. We are telling companies to evaluate whether they need a headcount versus an AI agent. But I think there are companies where speed matters. So it really depends on the kind of company. If you are in a space, let's say go-to-market tech, you really need to think about how valuable your product is to the customer, and your speed of execution also matters. And in that phase, sort of the growth matters. But there is, yes, a sentiment also around whether you can sustain that growth for the longer period. So we are not telling any company to burn money at all, but also look at where speed matters and double down on that.
This, I'm not in investment, but as a consumer of all the systems and then the AI capabilities that's delivered to us, a lot of the companies are focusing on incremental engineering. It's like slightly making the current things better, describing the data that we already have, or using the old algorithms with a little bit of add-ons. There are opportunities to completely disrupt with AI, restart everything. Do we need a ERP system? Or should the companies collaborate through the EDI or whatever, right? Can it be the cloud database talking to each other in a secured access way? Just completely disrupting the status quo, that might pivot us to a right next steps. And the second area I do want to comment on is a lot of the other companies are focusing on improving the productivity of an individual, how to make it easy for a person to code, or personal assistant, those kind of things. Expand on the business models, or expand across the organization productivity, across the ecosystem productivity. And that's what will help the entire value chain and also the entire ecosystems. And then creates more use cases, and then we will benefit because we will supply the chips, memory chips to AI servers. So.
Great. Excellent. Well, we started talking about fundraising. We've talked about how to run these companies, but probably the favorite topic is exits, right? Because the entrepreneurs want the payday, the investors want their returns. We started 2025 thinking that this was going to be a reopening of the M&A market. We thought the IPO market was going to reopen as well, and neither have come true. So it would be great to get the panel's views on how are you coaching your companies that if they were trying to find an exit, whether it be to one of the large tech companies or the public markets, what are you telling them now? How are you guiding them to manage liquidity expectations amongst the management team and the staff?
It's a pretty disappointing year so far, 2025 to start with, right? So I think, look, good news is my Google bought Wiz. It's a great exit, $30 billion or something. Last week or yesterday, Palo Alto bought Protect.io or Protect.ai for $600 million, few million ARR company. Right, that's a great exit for cybersecurity. So I think there are some happening, but right now, Lena Khan really screwed up last 4 years in Silicon Valley. She's not my friend, not my fan. Now the new FTC chair, Andrew Ferguson or whatever, Andrew, he's not my fan either. like all these guys. Look, we need a stable policy. Without M&A and IPO, Silicon Valley or whole tech sector cannot survive. So the one request to Trump administration should be is don't disturb the M&A market and IPO market. So 25 and 25 is done. There's not much going to happen. 26 should not be like 25. So if that happens, again, it's not a good show right now. So M&A, they thought that no LP is making money, no DPI. I don't know about Matt, you and you guys, but I am not, as an investor, not seeing any DPI anywhere. No cash. DPI is a metric for cash return. So if LPs don't see it, they will not invest on it. So I think it's been a very bad show in terms of IPO. There's no IPO market. If somebody's thinking IPO, you're hallucinating. You might have, the probability of you going to Mars is easier than going to an IPO right now. Right? Yeah. So it's not going to happen. IPOs are done for life in this country, for some time at least. So that means you need to find buyers. You need to get a sugar daddy and sugar mommy to buy your company, right? If I were you a startup, find your closest sugar mommy and sugar daddies. Right? No, there's nobody buying today. So find an M&A, find deals that can happen, because that really needs to happen right now.
The one thing I would add on the IPO market is because we see everything from early stage to large cap, and I think the public markets, I mean, they need companies of scale. So, no longer the $2 to $10 billion company, that's not attractive. In order to get real momentum and have sell-side coverage from the investment banks and for the large public investors to want to own your stock, you have to be in the billions. So, and M&A, everybody's just so uncertain right now. If you were going to fund the transaction with debt, that got a lot more expensive. And I would also say, if you were going to issue stock for a transaction, your stock price dropped 15 to 20%. So that's going to be challenging. But
just one thing to add, Matt. I think I agree with Matt on that. Don't do debt financing. It's a very bad thing. But more important, secondary. It's all about tech companies, and all this is about RSUs and stock options. Employees are not going to make money if you keep doing stuff. There's no secondaries. So when people keep raising like $10 billion in private market, whether OpenAI and those, OpenAI is at least doing some secondary to employees. 99% of companies don't offer employees to sell their stock in their secondaries. So employees are not making money. So investors are making money. So if you're at an unicorn and you spend 4 years, leave that unicorn. Go find some other company. Go to another smaller company, 3-employee company. So don't spend all your money sitting at a unicorn after 4 years, right? So get out. Go to some other companies. So otherwise, you're not going to maximize your wealth. I call it MIGA. You know what is MIGA stands for, guys? Make yourself great again. Not MIGA. Like, you make money, guys. Nobody's making money here. I don't know about you. He has a lot of money. I don't have money.
Yeah.
Matt is making money.
Well, we support the university. We do well and we do good. But
let's all go to him to get the checks.
Let's get a couple more thoughts, and then we're going to open it up to Q&A.
Yeah. Well, I think the environment, everybody expects to get better. It didn't. It got much more instability in the system. So it will take a while till things can get better. We always expect that they will get better one day. And I think they will. But I think it's going to take longer because no one expects the amount of disruption that is happening right now. Mm-hmm. So all the advisors here are good. We tell the companies, make sure you can make money. Most of many companies in our portfolio, they are post-break even and they can, play the long term. We are venture capital and we have been through several long curves. These curves are 10 years. They are, 10 to 15 years. So make sure you can win the game before you run out of cash. So make sure you can somehow make cash.
Fabio, you are making money through your fees. Is your investor making money with you?
The investments are making money and the companies are growing, but there is no DPI. There is no DPI. So
he also did not make money, so we should ask these guys.
Yeah.
Make yourself great again, MIGA.
Yeah.
Put your symbol as MIGA.
I do pre-seed and seed stage investing, so I'm really hoping in the next few years the environment improves.
Are you making money, Jyotika?
Not yet.
Not yet, okay. There you go. Nobody's making money on this.
I have a different perspective, and I think I can share with, I think most, I'm an electronic engineer from Brazil. I'm in Silicon Valley. I'm making money that is enough for me to keep playing and developing things and constructing things. And for an engineer, this is very good because you build a house and eventually the market's going to be better and you can sell your house. The market now is not the time to sell the house. Keep building. You are engineers. Keep building.
I just want to make money, man. I'm money engineering. I'm not electrical engineer. I'm not computer science. I want to make money. I don't give a shit about other things.
All right. Well, with that, let's open the floor to questions. We can take probably 2 to 3 questions.
So I have a question for Muddu, right? So you mentioned BC and AD. I like the way you dissected them. What makes you think that there is no one more 2-letter acronym that is going to disrupt AC, BC, and whatever that is going to come?
So I didn't understand the question. What's your question again?
So what makes you think or confident that there is no after DeepSeek? There is no more another company, because there are fundamental architecture problems with AI. Right now, the companies that are driving models, and it's basically where the incentives are, that's what we are seeing as the outcomes, right? So
got it. No, I'm not saying that when I say
they have vested interest in driving the current model companies, right? What makes you think that after DeepSeek there is not going to be another completely different architecture company that will completely disrupt all the existing foundational models?
Yeah, happy to. So I think you took my answer not correctly. When I say AD after DeepSeek, there could be AJ after Jesus Christ. It doesn't matter. So there'll be something. The models are coming every week. Yeah. If you saw Alibaba announce their own models, all my point is the models are going to change. The money is not to be made in this LLM models, or money not to be made in other things. The evolution is so much happening. You need to find a solution, whether that is in like code assistants, IT assistants, customer support. Shiva talked about ERP disruption. Find a solution. But things is like, if you wait if you're a company doing for 4 years, AI is so new, a 3-people company can kill you. Right? If you look at what's happening, otherwise Google will not pay Wiz $30 billion, guys. In cybersecurity, Google pretty much gave up in security. That's why they bought Wiz. So look at that. That's the whole idea. So if I look it back, the whole point is there will be so many new things will happen, like DeepSeek came in, something else will come. Gemini will have their own model. Some other small company may come. You need to evolve yourself so much. You need to find a product market fit. You need to find a go-to-market. You need to find a use case who will pay you millions of dollars. You don't want to spend 10 million on GPUs and make $1. Right? That game is over. That's why if you look at NVIDIA stock is down too pretty much. So how do you spend $1 million on GPUs and make $1? That's not going to work. So you have to make 100 million and spend 10 million.
Let's move to the next question. Kind of keep it short because we got to get a couple in.
Yeah, my name is Rajendra. I just wanted to check with you, the whole panel, that how much is hype in this whole thing? Because I think we're all talking about, but there are no solid use cases which have really made a huge difference in it yet. And there is so much of differing views in the whole AI space itself, because now we're talking about the AI ethics, and then there is Mira Murati has come up with a different way of where the humans and AI was going to work out. So where do you see, what is the roadmap, where it is going to go from your perspective?
I'll go on this one. I think it's more of a reality. Like everything goes through a hype cycle. You go through the hype and then a little bit of valley of despair and then take off. I think with the AI, it's the legacy technology is reached to the saturation point, and there has to be a next wave of disruption. But so far, it has been incremental improvements. Like how do we get to that disruptive use cases that it can take off is the next step, I would say.
I want to add a few things. It's real, guys. AI is real. Look at coding assistant. Software people are not getting jobs. I'm telling young kids graduating from UCLA and any other colleges not to even looking for a software jobs right now. There's nowhere software jobs. So it's real. Customer service jobs. At contacting customers, there used to be 70 million people in 2017 when I started my company. Today, that's down to 40 million. Like if you are working for Infosys, Wipro, Cognizant, you are running to exits right now. So it's real. It's not some hallucination. AI question is, how do you make money? The hardware guys are making money. As I said, so far, the last 4 years or last 2 years, OpenAI, Microsoft, Amazon, Google, NVIDIA, they made money. How startups can make money on this and survive and grow is the next game. Right? Now, in terms of ethics, there's no ethics, guys. When railroads were created, were you worried about ethics? And I think there's no ethics. First make money. Remember, if you don't make money, there's no ethics and morals. So I like Trump, what he did. He write an executive order, threw all those things out, what Biden wrote. Like, I don't want to kill the companies before they're born. Let's make money first, then worry about governance and ethics.
All right, we're going to take one more,
Yeah,
30
yeah.
seconds, one panel, and then we'll do a lightning round to close out.
Yeah, my question is for Shiva. You mentioned some very interesting problems for startups to cross-collaborate across ecosystems. Can you give me your top 3 ideas, which is generic, like you can build for any company?
Yeah, just a quick ones. The one, like today, if you think of the organization, right, we are an organization of 55,000 people. Our collaborations are through the Teams, Outlook, the meetings.
Okay.
Can this be a seamless workflow orchestration where it can be a agentic interlink where like anybody can simply write a process flow from end to end and eliminate all the legacy productivity tools as the collaboration thing? That's one.
First one.
The second, the kind of a ERP equivalent, right? Like now the cloud databases have matured significantly over time. And then now like, and many companies have the cloud backend.
Right.
Can we have like blur the lines between the company to company collaboration? If you see like over the last 10 years, like how the business to consumer have exponentially improved.
Yeah.
But the business to business is still through email, CDI, E2Open, those kind of technologies, right? Like, can this be completely disrupted with the AI
tool.
And then the other one is the entire, like all the companies are interconnected. Like you take like any companies, they are like interconnected in the entire value chain ecosystem.
Yeah.
But how can this complete end-to-end partnership and the visibility to the end customer all the way to the source, like be it for tariff or the sustainability reasons,
Yeah.
like that end-to-end visibility and then blur the lines between the companies, can that be? Those are like some of the quick things that comes to my mind.
Wonderful.
Wonderful. Thank you so much.
Yeah, thank you. And you can find our panelists. We'll probably be outside afterwards. But just as we thank everybody, just a quick, when we sit here next year, what is one bold prediction that you want to put on the table today that a year from now you think will come true? So we'll start right here. And it can be about anything, but yeah.
I think tariffs are real. Live with it.
Yep.
Prediction. And M&A, hopefully, will come. I want M&A to come back in 26, in 25.
Yeah.
That's my prediction.
There you go.
I think on the hype thing, I think the hype is real. We're going to see next year. A lot of things are going to fall down. But the hype is as big as the disruption is. And that's why we have that big hype. So we're also going to see, incredible things that we didn't expect.
I think the next Fortune 500 company will be at max 100 people.
I would say the next, the AI disrupting the way we have been doing things as one. The other one, we didn't talk about the quantum computing side, like that can make speed and efficient. It can complement the AI and bring up new use cases like that we never thought about. And there is that like the good intersection on it. And then like hopefully all this comes out for the better well-being for all.
Wonderful. And my prediction, given that we talked about sports this morning or this afternoon, is that the New York Mets will win the World Series. So with that, thank you. If we could give a round of applause to the panel. Good.